Hello guys, welcome to Bhavna's Online Academy, and in today's video in this AS series we are going to learn AS24, which is your discontinuing operations. Before I move into this standard, let me tell you that this is a part 1 of the video which covers your concepts. There's going to be a part 2 to this video which will have all your test and knowledge question plus your illustrations from your ICI study material. So to get in complete coverage, do watch both the videos, and as well as the notes that I'm going to be using in today's class is going to be available for free on my Telegram channel, the link for which will be in the description box below. Yes. So without further ado, let's begin with the video. Yes. So AS24, right? So AS24, it speaks of discontinuing operations. So now what I'm going to do first is, before I get into this standard, let me give you a idea on why the standard came into place, what is the purpose, why are we studying this, right? So you would have read a lot of standards, and different standards talk about different things. Okay, like suppose for example, let's take AS2. AS2 talks about your valuation of inventories, like what value you have to put your inventory in your financial statements, right? And the same way you speak of measurement, you speak of recognition, and etc, different factors. This standard AS24 is going to particularly teach you how you have to do the disclosure about a particular event. Okay, so here AS24 teaches you how do you do the disclosure of discontinuing operations, right? Yes. So now here in this standard you have to learn two things. One is what is discontinuing operations, what do you have to disclose about it. If you learn these two things, your standard will be complete. Okay, so your question will be, where do we learn the measurement, recognition, etc, so that you will be learning in different standards, correct? Only the disclosure part, like how you will have to disclose this event in the financial statement, you will learn in this AS24. Okay, fine. So what happens is, usually when do you discontinue an operation? When it is not working good. If something is doing a lot of profits and doing very well in the business, will you discontinue it? The answer is no. So discontinuation usually happens, the very common case is when something is running into losses. So suppose there is a entity, suppose you have Tata, okay, and there are two things. One is Tata Sky, and there is another division of Tata which is the Tanishq. Okay, suppose now Tanishq is making very well profits, but Tata Sky is running into losses. So what this Tata group decides is that they are going to discontinue Tata Sky. They are not going to use it anymore. Okay. So here how it helps the users of the financial statement when you are going to give disclosure about this separately is that, suppose there is 500 crores of profit that you are showing in your company. Okay. And 700 crores of profit is coming from Tanishq and 200 crores of losses is coming from Tata Sky. So the standard will tell you that whenever you are showing your profit, whenever you are showing your pre-tax profit and post-tax profit, please show what is the profit from your current operation separately, and from your discontinuing operation separately, or continuing operation separately and discontinuing operation separately. So it is going to help the user, whoever is going to read the financial statement. So now if you go and announce today that we are going to discontinue Tanishq, sorry, we are going to discontinue Tata Sky. So it will help the users of the financial statements to understand why you are doing it. What is the purpose? How is it going to help our company? So if you are going to discontinue Tata Sky, that means 200 crores of losses will be cut down, which means you will make 700 crores of profit. Correct? So it will improve the the financial position of the company in a way, right? So this is why they tell you to make certain disclosures when you're doing a discontinuing operation, so that the ability of the users of financial statements to project that what will be the enterprise's cash flow in the future, what will be the earnings in the future of the company, and what will be the financial position of the company in the future, that they will be able to judge easily. If you give these disclosures, they'll be able to understand. It will just be a better presentation of financial statements. Okay, so I hope you have understood, and this is why we segregate the information about what is discontinuing operations and what is continuing operations. So you separate these both and show them in the financial statements. Okay, so I hope you understood this background about why are we doing separate disclosures about discontinuing operations. Okay, so now we have understood the basic background. Now first let's understand what is it discontinuing operations. So a discontinuing operation, like here they tell you, it is a component of an enterprise. So in simple terms, you can also understand that it may be a division of an enterprise. Like example, now we took the example of Tata, right? So what are the divisions in a Tata group? So you have Tata Sky, you have Air Asia, then what you have your Tata Consultancy Services. Then, like we discussed below, you have Tanishq. Okay, so in different sectors, they have different divisions. Correct. The Tata Sky is a component, Air Asia is a component, TCS is a component, and Tanishq is a component. So these are different components of one enterprise. Okay, or one group, which is the Tata group. Okay, so a discontinuing operation first must be at a component level. Okay, fine. And then what it has to do is it has to fulfill three conditions: condition 1, condition 2, and condition 3. If these three conditions are fulfilled, see here you can see it's an and. If all these three are fulfilled, that it then it means it is a discontinuing operation. Then it means it is a discontinuing operation. Okay, so what is the first condition that it has to fulfill is that, let's go from the second point, it must represent a major line of business or geographical area of operation. Okay, so what does this mean? What does a major line of business means? So here they are saying that it can be, firstly, the component can be divided using two criteria. One, it can be divided using a business criteria, means using a means one minute, yes, means using your product or service. Yes, means using your product or service, it can be divided, or using your geographical area. Geographical area means your location, it can be divided. Okay, suppose if I'm a teacher, yes, so my product or service can be, I give CA classes, CMA classes, CS classes, etc. Geographically, how can I be divided? In the locations that I give. Suppose I give it in Mumbai, then I give it in Chennai, then I give it in Kolkata. Okay, and then I give it in Delhi. So these are my four locations. Either it can represent a major line in terms of a product or service, or it can be a major line in terms of a location also. Either it can be a major location or it can be a major product or service. So it has to be a major one. So now what does a major mean? So here it means that the component, whatever you're taking, it should be big enough. Okay, so big enough means what? Which component do you call it to be a major or big enough? Is if it is a reportable segment under AS 17, then in such case that component may be called a major, sorry, that particular line of business or geographical area may be called as a major one. Okay, so in AS 17, you remember, no, you would have read the 10% criteria, where the revenue of that particular component or particular division is 10% or more of the total revenue of the firm. Yes, so likewise you have 2 to 3 criteria there. Okay, so if any one of it fulfills, it becomes a reportable segment under AS 17. If you don't know, please go and watch my AS 17 video so you get a better idea about it. Correct. So then if it is a reportable segment, that means it is a big or a major division or a major component. Okay, but now what if the entity doesn't apply AS 17? In that case, how will you identify what is a major line of business? Then in such case, if it is a major product or service, it can be considered. Either you'll see AS 17 and find out what is the reportable segment. But if AS 17 doesn't apply, then in such case, what you can do is, if you feel it is a major product or service also, it can be called as a major line of business or geographical area. So first it should fulfill that particular condition. Now suppose Tanishq is fulfilling this condition, it is a major product for Tata group. Okay, so first condition is fulfilled. The second condition it has to fulfill is that it should be distinguished operationally and for financial reporting purpose. That means it should be separated. It should be separated in two terms. One, it should be separated operationally. It can be separated operationally. Okay, that means it should their assets and liabilities, what are there, no, it should be separately identifiable. That means this particular machinery is belonging to Tanishq. This particular machinery is belonging to make the jewelry. This particular machine is made to identify the pureness or purity of the jewelry. Okay, so like that, operationally the assets and liabilities, operationally means, yeah, operational assets and liabilities should be separately identifiable. If that is there, then it means it can be distinguished. And the second condition in the same point is that for financial reporting purpose also, it must be separately distinguished. That means, what do you say is, So what does it means is the revenue of the particular division must be separately identifiable. The operating cost of the division must be separately identifiable. If these both are separately identifiable, or what we can say is directly attributable. Directly attributable means how you can say here is that, or directly attributable, then in such case it fulfills the condition of being distinguished operationally and for financial reporting purpose. Or here what they have said is, here they have said that data, here they have said is data can be identified about assets and liabilities, revenues and major operating costs that are directly attributable to the DCO. Directly attributable here means that if suppose you eliminate that component, if the, see, if it is eliminated, that means if this Tanishq division, if this Tanishq division is eliminated or stopped, then in such case all these assets and liabilities, revenue and major operating costs will also get eliminated. Okay, that will also not be there anymore. Fine. So this is the meaning of directly attributable. That means because Tanishq is running today, all these are being incurred and you are separately be able to identify that also. Okay. So these two things, and the third condition that it has to fulfill, that component has to fulfill, is that it must be pursuant to a single plan. That means you have to make one plan. You have to make one plan, and using that plan you should be discontinuing the operation. You must be discontinuing that operation. In that plan, what can be written? It can be written that you are going to dispose of that component. How are you going to dispose of the component? We are going to read three ways here. The first is you sell it in entirety. That means the entire component you are deciding it to sell off. Entire component you are deciding to, that all the assets, all the liabilities, you are going to sell it off. So that is selling in entirety. Or what you can do it, you can sell it in piecemeal. You can sell it in piecemeal. Meal means individually. What you can do is individually a few assets. So what you make is you make four batches: batch 1, batch 2, batch 3, batch 4. Or suppose in a year there are 4 quarters. Okay, quarter 1, quarter 2, quarter 3 and quarter 4. So what you decide is, in quarter 1 I'm going to sell this many assets and this many liabilities, settle this many liabilities. Then in the quarter 2 I'll sell this many assets. In quarter 4 I'll sell this many assets. That means piecemeal. That means individually, or what you can say is one by one. Okay, not in entirety at once. They will not sell everything. So one by one or a phase wise, they are going to sell these assets. So by piecemeal distribution also you can do. Either you do it piecemeal, or you do a demerger, or you do a spin-off. That is the second method. Demerger means what you do is, there is one component, you separate this component from your group. Spin-off means, what it means is that you give the ownership to someone else. You give the ownership to your shareholders, supposedly, or you give your ownership to someone else. So that means your spin-off. Okay, so first method, what we understood here, first was either you sell it entirely, or second you can do a piecemeal, or you can do a demerger, or you can do a spin-off. Third way of disposing this is by termination through abandonment. Abandonment means you just say, we are not going to do anything to this, we are just going to stop all the operations related to this particular division. You stop all the operations related to this particular division. You're not going to sell any assets, you're not going to settle any liabilities, you just stop all the operations. So here that's what I have written: stoppage of operations as it is, without selling its asset or components. Why would any firm do this? Why would any firm do this? Why would they just stop it? Because it might have become such a bad business that nobody is ready to buy the assets or liabilities of this business. Suppose example, let's take the example of Kingfisher. Now when you see for Kingfisher, it became such a bad business that nobody was ready to buy its assets or liabilities. Okay, for example I'm saying, yes. So this is the meaning of selling it through a single plan. Okay, so if these three conditions are fulfilled, then in such case you would be able to call it a discontinuing operation. So now here first I now explained you that how do you dispose of, like what are the three methods of disposing of. What do you mean by a single plan? So here single plan means that single plan is a decision or a board resolution. That means all the board of directors come together and they make a decision, or they pass a resolution to close down the component. They pass a resolution to close down the component. That is known as a single plan, that they all sit together and pass a resolution. Here it must be time bound and in a phase manner. That means you must know what is the expected completion. Okay, what is the expected completion of this process of discontinuation, like in how much time this component is going to be discontinued. That it, you must be time bound, you must know when it is going to happen, at least expected date you must know, and it should be in a phased manner, it should be planned properly. Okay, so this was about your discontinuing operations. So now let's just tell you, yeah, so discontinuing operation, what did we read? First, there must be a single plan of discontinuing it. This is very, very, very important. Okay, so there must be a resolution that has been passed, or all the board of directors have come down and taken a decision. Okay, so there must be a single plan, and how can you dispose it off? You can dispose it off using three methods, either entirely, one either using piecemeal, demerger, or spin off. And what was the third condition? The third condition was that to abandon it. Okay, and then they told you that you must be able to distinguish, what you must be able to distinguish the operational factor separately and the financial reporting factor separately, and it must represent a major line of business or major line of geographical area, right? So this is your discontinuing operation. If this discontinuing operation is able to fulfill these three conditions, then in such case it will be required to get disclosed. The disclosure of this will be required. Okay, I hope you understood this. Now next we are going to understand what is next we are going to understand what is not a discontinuing operation. Okay, that means it looks like a discontinuing operation, but it is not a discontinuing operation. So here they have given you 5 cases. Please remember them. It will be directly taken up and asked in the question. Okay, yes, that what is it? They'll give you a scenario and they'll ask you whether this is a discontinuing operation or not. The answer is it will look like a discontinuing operation, but it is not a discontinuing operation. So what are those 5 cases? The first one is gradual or evolutionary phasing out, okay, of a product line or class of service. That means gradually you're stopping the product, or gradually you're changing the product, or gradually you're changing a service. Gradually, little by little, little by little, it is going and phasing out. Okay, that means you have not made a single plan today that we are going to close everything, we don't want to continue this, we are going to discontinue. You have not done any of that sort, no single plan, nothing. You have slowly, what happens is, as the business ran year by year, losses kept on incurring, and gradually, one by one, the products kept on closing. Suppose Tata Sky might have had a lot of products. It must have had a remote, then it must have had that pack and all of that. So little by little it kept on phasing out. Okay, so over here, this is because it does not fulfill the conditions that were given about, that a single plan was not made for it, okay, specifically. So here this will not be a discontinuing operation. Gradual means little by little it has been phasing out. Evolutionary phasing out here means that what happens is, there is one particular product, okay, and suppose 4G is one product. Okay, suppose 4G is one product and there is another product 5G. Now what is happening? Slowly 4G is going out of picture. Slowly. Because why? Evolutionary product, that means a better product or a newer version of the previous product has come out in the market, which is 5G. So this is growing now, correct? So 4G slowly phasing out, not because it is incurring huge losses or something like that, but it can be also for that reason. But now here what happens, evolutionary product has come out, that means 5G has come out, because of that 4G is phasing out. So gradual or evolutionary phasing out of a product or a class of service will never be a discontinuing operation until and unless it is para 3 is satisfied. Para 3 is nothing but these three conditions. If these three conditions are satisfied, then you can call it a discontinuing operation. But apart from that, it will not be. In general case, if no other information is given in the question, you will assume that it is not a discontinuing operation. Okay. So change in product or change in service will also be considered here. Okay, next is discontinuing several products within an ongoing line of business, even if it is abruptly done. That means there is one particular division, suppose there is a soap division, okay, of HUL, and they have a lot of soaps within them which they make, correct? So suppose there is a soap A, soap B. The soap A is a men's soap B is a women's soap C is a children's soap D is a hand wash soap. So like that, they're making a lot of soaps in the soap division. Okay, so under the soap division, if suppose they are saying that men's soap we are going to discontinue and hand wash soap we are going to discontinue, okay, and like that several other soaps they are going to, in one division itself, several products if they are discontinuing, that will not be a discontinuing operation, because what we read, it should represent a major line or a major product. Now men's soap might not be a major product, a hand wash soap might not be a major product for them, so in such case it will not be a discontinuing operation. So if you're discontinuing, even if many products you're discontinuing together of an ongoing line of business itself, that means in the soap division itself, even if it is abruptly done also, it will still not be a discontinuing operation. You have to fulfill all the para 3 conditions for that, so that it may be called as a discontinuing operation. Okay, next is shifting of a production or marketing activity from one location to another. That means what you're doing is, suppose right now I'm producing in Rajasthan, I want to now shift to Maharashtra. Okay, so either a producing line you're shifting, because maybe you might get cheaper labor there, or maybe the technology is better there, etc. It could be for various reasons. Or your marketing team, you're shifting from one location, suppose from Rajasthan to Maharashtra, you're shifting because in Maharashtra, suppose there are a lot of film stars and there are a lot of marketing agencies, etc. So you think the marketing will be better there. Okay, so for any reason, if you are shifting your production line from one place or marketing line from one location to another, it does not mean you're discontinuing the entire division. It just means that you're shifting the location. You're not closing down anything, correct? It just means a change or a shift. So in such case, also it will not be a discontinuing operation. Okay. The next one here they tell you is you're closing a facility to achieve productivity improvements or cost saving. Suppose I was running a particular production line. Okay, and what you were incurring a cost of suppose 1,000 rupees per product for that producing or a particular production line in a process. Okay, here so what you did was, now suppose raw material you are producing in your company or in your entity itself. Okay, from raw material until finished goods, everything you are producing in your company only. But what you understood was, if raw material I'm going to purchase from outside, I'm just going to get it at 400 rupees. 600 rupees of cost savings I can do by closing down this production line. So as a professional company or a rational thinking person, what you would do, you would of course close it down, correct? So that does not mean that this finished good also is entirely being discontinued. It just means a particular production line is being discontinued. Why is it being discontinued? Because to achieve either productivity improvements or to do cost savings, like you outsource your example, you're outsourcing your work. Okay, so this closing down of facility will also not be a discontinuing operation until this para 3 or those three conditions are satisfied. Okay, next is selling a subsidiary when similar work is done by holding or another subsidiary. Here they tell you that if the parent company is, or the holding company is selling off their subsidiary, and this subsidiary is in the same line of business as their parent company or as their holding company, or there is another subsidiary of this parent company. So that is, suppose you are planning to close down subsidiary or sell subsidiary 1, and there is subsidiary 2. Okay, there is another subsidiary 2. The parent company has two subsidiaries. The parent company has two subsidiaries, subsidiary 1 and subsidiary 2. Suppose you're planning to sell off subsidiary 1, and even if the subsidiary 2 is in the same line of business as subsidiary 1, that means either the holding company or another subsidiary of that holding company is doing a similar work to that subsidiary, then in such case, if you're selling that subsidiary, it will not be called a discontinuing operation. Okay, so here it means that suppose subsidiary is in the line of soaps and parent is also soap making in S2. That means your subsidiary 2 is also making soap. Then in such case, it will not be a discontinuing operation. Okay. I hope you understood all these 5 points. So what were the 5 points? One, there is a gradual or evolutionary phasing out. You are discontinuing several products at once. You're shifting your production or marketing activity from one location to another, or you're closing down a facility or a production line. Okay, or you're selling a subsidiary. All these will not be a discontinuing operation until and unless para 3 is satisfied. So specifically here they have told you these examples because it looks like a discontinuing operation, but you have to remember it is not a discontinuing operation. Yes, so that was about what is not a discontinuing operation. So the next we move on to what is the initial disclosure event. So until now, what have we read? Just give me a minute. Let me delete all of this. Yes. So until now, what did we read? First, we understood what is a discontinuing operation. Second, we understood what is not a discontinuing operation. And third, we are going to understand that what is that event? What is that trigger point? In simple terms, what is the trigger point, from which time or from what event is it called a trigger point, that from that time you have to start disclosing your discontinuing operation? What is that point? You know, that from this year, what will be the trigger point, that from this year you have to call it a discontinuing operation and you have to disclose it separately in your financial statement. So what will be that trigger point, we are going to understand. So after this initial disclosure event is nothing but your trigger point. When such event or the trigger point occurs, from that your disclosure will begin. Okay, from that your disclosure requirements will begin. From that year you have to start disclosing your discontinuing operations as said or as separately. Okay, so what is the trigger point? It is the occurrence of the following, whichever is earlier. That means there are two events which are given here. Any one of it, if it happens first, you have to start disclosing it from that date in your financial statements. Okay, one, the entity has entered into a binding agreement for sale of substantial assets. That means, suppose this is a Tata Group has entered into a agreement with Reliance Group, that it's a binding agreement, that they have agreed into a legal agreement, that they are going to sell all of these assets to them. Okay, either one, the agreement for sale has been made, that you have made the agreement for sale, or the event might be that the entity, that means the board of directors, have approved the detailed formal plan. That means a plan was made, and the plan has been approved by the board of directors. It has been approved by the board of directors, and as well as they have also made an announcement about that plan showing commitment. That means whoever is going to be affected by this plan, no, they have made the announcement to them also, which is showing that they are committed towards executing this plan. That means it shows that they are committed towards executing this plan. Okay, so here your doubt will be, there are two terms which is given here. What is a detailed formal plan, and how can you make an announcement? When will it be called a valid announcement? So what is a detailed formal plan? So detailed means it should include the following things. First is that, here first is, you have to, in that plan you must be able to identify what are the major assets that you're going to dispose. So this and this assets, asset A, B, C and D we are going to dispose of, so it must be clearly identified and given in the plan. Next, they are saying that what is the method of disposal? Are you going to dispose it entirely, by piecemeal, by demerger, by spin-off, or what is the method that you're going to dispose it? Or suppose, if you're taking in terms of assets, so assets, whether you're going to auction these assets and sell it, or you're going to put it into scrap, or what is going to be the method of disposal, you have to put that into the plan. Next is, what will be the period of completion? What will be the period of completion of the disposal? That means how much approximately or estimatedly how much time it is going to take to dispose of all the assets or the entire component. Okay, and what are the principal locations that are getting affected? That means by closing down the Tata Sky division, what are the divisions or what are the locations that will get affected? Okay, suppose you're just closing down Chennai location. Okay, so your Mumbai location, your Kolkata location, your Delhi location, will it get affected or not? If it is getting affected, then you have to write it down. Okay, and then the next one is about the employees. That means because you're going to terminate their service also. Suppose all the employees are working in the Tata Sky division will be terminated now, correct? About those employees who are going to be compensated for the termination of service, about their location, function, and how many number of employees are you going to compensate, that you have to write. Okay, so this was about the employees. What was their location, which location they were working, what was their function, what was their job role, manager, assistant manager, in which division, and how many number of employees like that are you going to compensate for terminating their service. You have to write that down. Next and final one, they are saying that what will be the estimated proceeds or salvage value to be realized from the disposal. That means when you're selling of the asset, what is the estimated value you are expecting out of it, that you have to write down. So if all these things are present in a plan, it will be called as a detailed plan. It will be called as a detailed plan. Okay, and what do you mean by when you make an announcement? When you make an announcement, to whom you have to make announcement? To those who are affected by it. You have to make announcement to those who are getting affected by it. Okay, so by closing down of Tata Sky, suppose Tata Sky was a listed one. Okay, so if SEBI will come into place, you have to inform it to them. If it was not listed, you need not inform to SEBI. Okay, so depending on what the circumstances are, you have to inform to them. All the stakeholders, the customer, supplier, employees, government. Suppose there was no supplier from a start to end. Everything you're making in your company only. So then there will be no supplier, need not inform. It will never be like that. I'm just giving you an example. Government, which department you have to go and inform. So all of that you will have to make announcement to all these people, and all these people must be recognizing it, that it is, you are very serious about this. They must also be serious about hearing that announcement. Okay, and it should show your commitment towards that plan. So either if this condition, second condition is getting fulfilled, or either if first condition is getting fulfilled, whichever is earlier. Either what can happen is sometimes you can make an agreement for sale but not announce it in the public, or what might happen is sometimes you might just make a plan that you're going to do this and this, and you're going to sell it, but now until now you're not made an agreement with anyone. You have just made a plan and you made an announcement that we are going to do this. Either of the two can happen earlier. So whatever happens earlier, you have to uh, you know take it as your trigger point or your initial disclosure. Even that means after that particular event has happened, you have to start disclosing your discontinuing operations separately in your financial statements. Okay, yes. So now, what was the third? So now, what did we read? We read what was discontinuing operation, what was not a discontinuing operation, what was a trigger point that from when we have to disclose it in our financial statements. Now we are finally going to read what are the disclosures you have to do. What are the disclosures you have to do? Disclosure means you are going to present a few facts, or you're going to segregate and show some information in your financial statement. Okay, from when you have to start doing it, you have to start doing it from the period in which the initial disclosure event happens or the trigger point occurs until the particular component has been discontinued or discontinuance gets completed. Okay, so this will be the period for which you will disclose it. Okay, so there can be two types of financial statements. One can be, there can be an annual financial statements, and there can be interim financial statements. So in annual financial statements, what will you disclose, and in interim financial statements, what will you disclose? We are going to read now. First, in annual financial statements, they are telling you that means each year end you release this statement. An interim can be either quarterly, half yearly, or so. Okay, that means it is not in year end financial statements. In between of the year itself, you release one financial statement, that is interim. Okay, so annual financial statements, first you have to give the description of the DCO. That means what it is. This is a, suppose you say that this is a Tata Sky Group, it was working in the telecom sector, etc., etc. So give a description of what the discontinuing operation is, or why you are discontinuing this operation. Yes, so you give all of those details. Next, they're telling you that you have to tell under AS 17, in which was it reported, like was it a business segment or was it a geographical segment, how was it being segregated, under what, whether it was being disclosed as a business segment or a geographical segment, and why was it being reported under AS 17. Give that details also. Okay, next, they are telling that give the date and nature of initial disclosure event. Whether did you make an agreement of sale first, or whether did you make a detailed plan and made the announcement first? What was the nature? Give that. And when was the date when that trigger point happened? Give that date also. That means every year. So once, before I move with the other things, you have to remember this information. You have to give every year until the uh, discontinuing operation is being completely discontinued. Okay, yes. Next is you have to give an date or period in which the discontinuance is expected to be completed. So completion date, what it will be, you have to give that, or for how many months it is going to go on, 24 months, 72 months, or how is it. Next is what is the carrying amount or in as of the balance sheet date of the total assets that are going to be disposed of. That means all the total assets that you're going to dispose, what was the carrying amount? All the total liabilities that you're going to settle, what was the carrying amount on the balance sheet date? That also you have to show separately. Next is what are the revenue and expenses? This also you have to show separately. Okay, from the ordinary activities which are attributable to the DCO. That means how much is from DCO, how much is from continuing operation. You have to show that separately. Next is what is the pre-tax profit and what is the related tax. That means what is the profit, then what is the tax, and what is the profit after tax. So all these things you have to show separately. And then finally, what is the cash flows attributable to DCO, that currently how much money, okay, in cash outflow and inflow, how much is it there from DCO, how much it will be there in the future. So like that, cash flows also what is attributable to the DCO, you have to give. See here, you have to see here, they're saying one about balance sheet item, that means assets and liabilities you tell. Then next two things they talk about P&L item, and the next thing they talk about your CFS or your cash flow statements. So last 4 points are about all your financial statements directly. First 4 points they are asking about your general information. Yes, first 4 points are general information, next 4 points about your financial statements. Yes, so these are all the things that you have to disclose in your annual financial statements. So first year you will disclose all these. Then what did I tell? Every year you have to again and again keep on disclosing this, correct? But every year will you make any updation, or the same information will carry forward? So here there is one more item that will get added from the next year, which will be what is the gain or loss on the sale of assets. So here you have decided that you're going to sell. Suppose in the first year you did not make any sale, and from the second year you made some sale. Okay, so what was the gain or loss from it? That information also you please disclose in the annual financial statements, as well as what is the expected timing of the remaining sale, when the remaining sale will be happening, that also you can give update and give in the annual financial statements. Okay, next is in the interim financial statements, that means in the mid year, suppose you are releasing, for example, you are releasing a financial statement. In that, what are you going to disclose? So in that you will tell the activities in DCO, since in the most recent financial statements, that means from your previous financial statements until this financial statements, what are the activities that has happened in a DCO? How much you have sold, what is the operations, is it working, is it not working, etc, etc. All these activities, whatever is happening in DCO, you have to disclose about that. That from the last financial statement point to this financial statement point, what will be the difference, what has changed, that activities that you have to give. And what is the expected changes in the cash flow or timing of cash flow, that also you have to give. Okay, so these 2 points you have to disclose in your interim financial statement. So that was about your disclosure part. I hope you understood it. And then they also tell you to give some additional disclosure, which means whatever asset you have sold, right, what was the profit or loss on such sale of assets? Okay, what is the pre-tax, that means before paying tax, what was your profit on such sale of asset, how much was your tax on such profit or loss? So both of these things you have to additionally disclose. Along with that, when there is a binding agreement to sell, what was the sale price, what was the sale price means at what price did you agree to make the sale, what was the carrying amount of assets at that time, what is the expected timing that you're going to receive the cash after you're making the sale, what is the expected time that you will receive the money? All these information, additional disclosures also you have to give. Yes, so yes guys, so that was all about your AS24. I hope you understood this. Let me give you a quick recap. First, you understood what is a discontinuing operation, then you understood what is not a discontinuing operation, then we understood what will be the trigger point, that from which period we have to start disclosing it, what will be that event, we understood that. Then we understood what we have to disclose, and we understood some additional disclosures. Okay, and then finally there are some other points which says that these are two, like MCQ, it can be asked from this. Okay, so here they say that DCO is an infrequent event, that means every year this some operation you're going to discontinue, it's not like that, it is an infrequent event. Okay, like once in 3 years or once in 10 years or any time it can happen, but you have to remember that not all infrequent events are discontinuing operations, of course, right? Yes, so here they are saying DCO is an infrequent event, but not all infrequent event are DCO. Okay. Second point you have to remember is that DCO has no relation with going concern. That means if an operation is getting discontinued, it does not mean it is affecting the going concern of the entity. Okay. Here, because discontinuing operation is related to a particular component of the entity, that means a particular component you are discontinuing, it does not mean that the entity's going concern may be affected. Okay. Yes, so remember these 2 points also. Yes, so with this we end our discontinuing operation, that is your AS24. These notes will be available on the Telegram channel as said, and watch out for the second part to solve the questions related to this. And yes, in case if you have any feedback, do leave that in the comment section below, or any questions you have about this AS24. And otherwise, please like, share this with your friends, and also subscribe to the channel. Yes, thank you so much. See you in the next video, guys.